How do you identify a bottom in crypto or equities? What are the history of bottoms in these markets? If you want to hear a story about my Wall Street and crypto career and the bottoms that I've seen, then stay with this video and subscribe to this channel. Let's kick it off. Two types of bottoms, quick and nasty, and then there's the prolonged or the sustained fearful bottom. Let's start with quick and nasty. Back in 2008, after the stock market had started to go up, say in the first quarter of 2009, after the market recovered, there was a nasty dip. Now, at the time, it didn't feel like a nasty dip. It felt like a resumption of the bear market. It looked like a resumption of the bear market. It went straight down, and anybody who could read a chart figured this was the rally that you faded, and this thing was going to crack and blow up again because the Great Recession was on. Well, as it turned out, we discovered, as in chart guys, discovered the power of quantitative easing, QE, aka money printing, the Fed flooding the market with high-powered money. So as soon as the stock market went down, it went down so sharply and came back so quickly that I remember me, the guy who was working at Goldman, and the guy who had worked at Goldman before me, who had gone out on his own, both felt so bad about coming out bearish into the weakness that we both to apologize. That's how nasty the reversal was. And that's how caught off guard we were, because it definitely looked bearish, but clearly wasn't, right? It was so nasty, we apologized. Another nasty example comes from the world of crypto. Bitcoin in 2017 was on the move as whales figured out how to print tether, pump the market, creating huge hype around Bitcoin. So Bitcoin had gone from like 1,000 to like 8,000 in a very condensed time frame, creating unprecedented price action for the time, or unprecedented prices really, because Bitcoin had always been wild on the upside. But all of a sudden in the summer, amidst the hype, Bitcoin dropped 40%, like kind of out of nowhere, and the dip was deeper, like 40%, than anybody would have figured. Now, these days with Twitter, everybody knows that your standard big Bitcoin flush is anywhere between 30 and 40%, but back then, you had the naysayers out in droves. It was like, see, don't touch this stuff. See, it was no good. I was actually working at a stock brokerage company at the time, and I kept telling everybody, Bitcoin, Bitcoin, Bitcoin. Then it goes down 40%, and everyone gives me a hard time. But then, again, it was kind of like, instead of me apologizing like the first example, it was them apologizing to me as Bitcoin stopped and turned around and went up. Now, at the time, I was telling people that Bitcoin was like fast-moving fine art, right? Super cool, super like volatile in a way, but like a store of value like art, just cooler. Now, that's evolved into like a digital gold, digital property, new monetary system theory that's developed today thanks to Michael Saylor. So there was a dip in stocks where I apologized, and then there was a dip in crypto that was so fast, furious, and was unwound in the same way that people were apologizing to me. Now let's talk about the drawn out. This was the collapse in Bitcoin from 6,000 to 3,000 because of a problem in the Bitcoin mining world. This was the climax of a gigantic bear market that saw the bull market of 2017 unwound in price and also create revulsion that people had not seen in some time. Crypto has a phase called winter, but this was like crash and then winter. So after Bitcoin had gone to 3,000, I remember writing an article with a bear with icicles all over him and the Bitcoin as an image that Bitcoin might drop to 1,500. And the second you hit enter and publish the thing, I realized it was wrong. I made the low. I demonstrated to myself about radical bearish sentiment. I was the guy who was too bearish. 20 minutes after I wrote that thing, I'm like, I'm turning this around. I'm turning it all around. There is no way this thing is going to stay down here at 3,000. At a minimum, it was going to unwind the whole sharp decline from 6,000. Now, how bad was the sentiment at this bottom? I worked with a guy, like a Bitcoin founder. Now, he was on the phone with the media and asked me for a chart read. They were asking him where he thought Bitcoin could go. Now, when it was at 3,000, I told him 13 or 10. Actually, I told him 10,000. And he was like, I can't tell him that. He was actually annoyed. That's how bearish the world of Bitcoin was. That's how hard it was to be bullish Bitcoin. And again, this is how you knew it was an epic bottom. The guy who loved Bitcoin, the guy who told us that if we could get Bitcoin below 10,000, we would be set for life. Seriously. And he was concerned at the time about credibility by telling the media anything above 7,000. Now, of course, classic example, right? First, I get too bearish, then I flip it around, and then I use my imagination to say, okay, how about, 13,000 or 10,000 quickly? That actually happened. There's one thing you have at a bottom is when people get comfortable being bearish, or, it's so ridiculous to be positive. Another sign of a bottom, right? When it's ridiculous to be bullish, that's when you get some of the biggest moves. Sometimes you get analysts bearish, sometimes you get traders bearish, but when everyone's afraid to say it, you're looking at a bottom. Now, of course, money is made in the waiting. That particular thing was a waiting game. Now, the most epic bottom that I was ever involved in happened to be in stonks, right? 2011, you had multiple European countries insolvent, their debt was collapsing. Hedge funds that owned that debt were blowing up. It was a mess. Stocks were down 25% from their highs on an assumed repeat of 2008, only with sovereign debt. Lo and behold, I did an Elliott wave count. And I said, you know what? I'm going to write this report that this is a bottom. And that seemed crazy. And what really stuck with me was how horrible it felt inside, like in my body, to actually write that this was bullish and this was going to go back up. I mean, literally, I felt like a fool publishing it, only to find out that when I sent that message in that report to the Goldman Sachs machine, every salesperson who had been just dying to get their clients involved, along with the trading desk, picked up the phone and enthusiastically bought, I think because they were just looking for some good news, to be honest. They're like, oh, wow, something good. Somebody thinks we should buy. So they all piled in. And as it turned out, once all this giant pain and all this worry fizzled, when the European Central Bank said, we'll do whatever it takes to stop it, the 25% decline in the overall stock market, along with, all these major equities in tech and alike, they went up like 40 or 50% in like a very short amount of time. Like you got a year's worth of performance in a week, and I got promoted. And what did I get promoted for? Well, for being bullish at a bottom, but no one ever knew how scared I actually was when I sent that. I'm like, I'm going to be laughed off the planet, right? I mean, I helped call the top, and you knew it was a bottom because you were too scared to send the email, which is in contrast to one of the first stories where it was like, I sent the thing that I was bearish, and then I was like, oh, that's gotta be wrong. So, that was more embarrassing, but less painful. That's the story of bottoms. If you like this, don't forget to hit the like button on the way out, or if you want, leave comments to hear further videos or further bottoms or tops in whatever market you like. Let me know.